started. Good morning and good afternoon, everybody. Thanks for joining us again for our webinar. Today, we are looking at expanded programs to close more non-QM loans in 2023. Once again, I will go ahead and read our disclaimer. The content of this presentation is proprietary and confidential information of HomeXpress Mortgage Corp. It is not intended to be distributed to third parties not participating in this webinar without the written consent of HomeXpress Mortgage Corp. Let's go ahead and take a look at our agenda. Again, lots of good stuff happening here, and we have an appendix at the end that you guys can refer to for more general information about HomeXpress. And once again, everybody will receive a copy of this deck from marketing in the next day or so. Again, welcome Mr. David Greider, our SVP of Wholesale Lending. I am Andrea Formato. I am the Sales Training Manager here at HomeXpress, and we are so happy to have you here today. David, you know that I like to do polls. Okay, so we're gonna do our first poll that has to do with the housing forecast, right? We're gonna look at it. We're gonna look at some facts here on the next screen. So here's the $1 million question. Do you think rates will go down in the next quarter? So absolutely or wishful thinking? What do you think they're going to vote for, David?
I think it's wishful thinking. That's what I think is going to be the most popular. I wish rates would start heading down, but I know the Feds was speaking this morning, and I'm going, I don't know, man. It's like
I don't know,
a few basis points, but be interesting to see what the audience thinks, though.
Well, I think this is exactly why you run these, because let me share them. Can you see the results?
Oh yeah.
Yeah.
Wishful thinking.
Wishful thinking. Well, with that being said, thanks everybody for participating in the poll. Let's go ahead and move on to the next slide, David.
All right, great. So let's kind of look at that housing and mortgage forecast here. You know, again, you don't need to read this, but this is the latest one I pulled up from MBA. It was May 19th. Probably have a new one today. But as you're going through, you know, looking at the forecast, it's going to change month by month. And I think the biggest thing that we hear is like, hey, man, the economy is still doing well. Employment's still relatively high unemployment. You look at the dual mandates the Fed has is, you know, inflation and employment, that they just consistently say, hey, man, I think the commentary today is that they might do another quarter point rise to the Fed fund rates in July. So although this forecast is out of May and they're saying, hey, rates look like they're going to head down in Q4 of 2023, I think it's going to be sideways for the rest of 2023. So what's that mean for us, right? What it means for us is that, hey, the environment we're in today is probably the environment that's going to be in 2023 until something kind of breaks or we get some stabilization of where we're at in the economic forecast. And again, this is a lot of my opinion that's going on. And again, my opinion is 30 some years of looking at these cycles going up and down, right? So it's not the first time I've seen a cycle where rates go down, the rates go up. But in fact, when I first entered the finance world in mortgages and interest rates, man, rates are in the 18% range, right? And then all of a sudden it goes down, right? So over time, it depends on where you're at. But I think everybody kind of understands kind of this is a market at. And the good news with that, if there is the good news, I think a lot of individuals are saying, hey, this is the reality are. If they need to move forward and buying a house for their family or refinancing for cash out, they understand where it's at. And I don't think we're going to have some big movement in mortgage rates way up or definitely not down, but it's going to be more of a sideways moment on this. And then 2024, we're going to see some nice movement in rates, and 2025 is going to be a good year. So those that really get down on these non-QM products and some of these other things you may not be accustomed to, when those rates come down, you're going to be able to capture more market. And remember, every loan you do today is really two loans, right? Because you're doing a loan today at 8% or 7, 8, 8.5. There's going to be a time to refinance a rate and term on that. So with that, we'll kind of look at some of the expanded programs here so we can capture more loans. Now, this first glimpse I wanted to talk about, because this is This is on page 1 of our guidelines, right? Now, Home Express is a true lender. We underwrite to our own guidelines, right, and fund with our own money. But what does this mean for you? Home Express Mortgage Corp is a common sense lender and will consider all variables when rendering an underwriting decision. That means we make exceptions, right, to whatever some of the guidelines. We look at each loan on its own merits. And some of the things that we consider just from our experience, and you look at past history of mortgage and the performance of those, one is delinquency, right? So what is the odds or, the risk of this loan going into a delinquency? The other thing to look at is if it does go in delinquency, what is our loss if it goes all the way through that delinquency cycle? The other thing you look at is, just our opinion, but also some of the rating agencies and due diligence and how they look at it, right? But ultimately, if you send us a loan and the more information we have, and this is the story that it is, most likely you're going to get it approved. And I got some stats on that on our approval and some of our pull through, which is great here. So with that, even though I'm going with some of these expanded guidelines, keep in mind that just tell us the loan. We want what we might deem to see challenging loan. For us, it's not. So I'm gonna look at first in our consumer purpose loan. And as I wanted to talk a little more expanded programs, I'll give you a little kind of like history of why we're expanding guidelines right now versus second quarter, third quarter, fourth quarter last year. As the rates started going up last year, right? They started going up. There were some concerns about HPA. That's home valuations maybe going down and delinquency. And so as we gone through kind of 6 months, we kind of figured it really hasn't been a huge spike in delinquency. And in the home values, there's some segments of the United States that have gone down. I look at the Bay Area, San Francisco area in particular, they've gone down a little bit. And you probably see some of that, but overall, it hasn't gone down. It's kind of stayed flat. And there's lots of reasons for that. It could be, one of them is lack of inventory, right? There is a lack of inventory for housing out there. So there's a lot of people on the sidelines that would love to get into a house. And we kind of handcuff a lot of people that would move from their house today, where they're living, because they got such a low rate. If they did move, their payment would go up, and it doesn't make economic sense. Until that equilibrium gets there, we won't see a huge spike in volume, but there's still going to be lots of loans out there. And before I go this, this is going to be a record month, for us in 2023 on non-QM volume. We'll probably get in over 300 million worth of non-QM loans, which is just, you kind of look at it. There is loans out there. There's people that need cash out and to get in a home today. So I'll go with that. We'll talk a little about some of the highlights. I'm going to give you some examples of some recently closed loans. So we increased our loan limits up to 3.5 million. Reduced on the minimum equity requirements to 25,000. If that's just a hard equity on the loans, we've seen a big spike in some of the investment loans with this, where people are looking at buying the $200,000-300,000 house. Where if a certain LTV is not there, you might have a reduction, but we reduce that to capture and help out more borrowers. Non-owner occupied refinances for consumer purpose. Now, most non-QM lenders do the business purpose on non-owner occupied. So if you do cash out, it needs to be business purpose. But we've added in the non-owner occupied refinances where it's a TRID loan because they're going to use that cash out for personal reasons. That's debt consolidation, tuition, or whatever for their kids going to college, those type of things. High-rise condos, right? We've expanded into South Florida. Before we used to always do high-rise condo, but I wanted to point out South Florida has always been a kind of a challenge. But we put in some programs with that to help you capture some loans out of there. Short-term rentals, second homes on a consumer basis. We do DTIs to 55%. And you listen to some other webinars, income options for a self-employed. We have a lot. Not only the bank statements that everybody is more accustomed to, that's probably primarily the number one percentage of the come in, but there you can add assets to it. You got multiple business bank statements on that. If they own 2 businesses. You also have personal bank statements, P&L options. And we have asset programs in full. And again, we make exceptions with compensating factors. And one of the things I look at today is a credit event. So I have an example of that where on our consumer purpose loans, we understand that individuals might have some obstacles in their life where maybe it's a divorce or a job loss at one point, medical things that happen, and they kind of have an event where, hey, they went delinquent on a mortgage, right? Maybe it's a 60-day, right? But they got back on track. What are you gonna do? Turn that down when they got themselves going? No, that's a loan that we can do, right? So let's look at some of the examples here of some of the consumer purpose loans. So scenario one here is a purchase request in California. The challenge was a self-employed and 100% gift, right? So our resolution is that we looked at the bank statements through our income desk, right? That was done up front, so they knew we qualified on ATR or the DTI. And then it's okay for 100% gift with 20% down and 6 months reserve. So we closed this in 3 weeks. It was a really great loan, limited payment shock. That means their current existing housing payment was similar to the new one that they got on the new loan. So that was one that we helped out, a great partner of ours. Scenario number two, we'll go to that one. There we go. There's a purchase in Florida. And this one, it was a fallout to agency, so it was full doc, but it was a non-warrantable condo. What made this non-warrantable condo was the condominiums had partial leasehold, right? And you'll see these in some complexes throughout the U.S., primarily in Florida, where the recreational facility will be on leasehold land, right? Which made it non-warrantable through agency, and we're okay with that, right? So it came in as full doc. I'm just letting you know we can lend on non-warrantable condos. Helped out another broker partner of ours close more loans and potentially get the next loan here because when rates go down. Another recent close scenario is a purchase in California, one of my favorite ones, because this was actually at another non-QM lender that really couldn't make exceptions where we could, right? Is a 1-year full doc, had a 1/60. And we looked at the credit history of this and it's like, man, it always pays their mortgage and housing on time, and had a 60-day in the last 12 months. Now, normally that's, hey, we can't do it. That we looked at it, made the exception, right? 25% down. Again, probably a little more lower FICO score because that 60-day, but we just grabbed everything, closed in 10 days and saved this borrow, from purchasing this home, had great reserves, all those things. But things happen in life and we're able to make that deal work and get it closed.
Thanks, David.
So,
before we go on to the business purpose expanded programs, I do have another poll. So I am going to get that going here, and it has to do with DSCR. So this is a true or false question. Home Express allows for DSCR under 1. So we got some good right out of the gate, David. Some good answers here.
I'm hoping everybody gets this one right. And if you don't, then it's good to know we got options. Right?
That's right. That's right. Absolutely. So we'll just give it another minute here. This was a good one for me. I wasn't sure where to go with the poll question, but this seems to be good. Everyone's answering right away. So, okay, this is interesting, David. So I'm going to go ahead and share the results. Can you see them?
Yep. We got true 90%. Man, we have a few that, may not have known that we do, right?
That's right.
Okay.
Let's talk about it.
Let's talk about some of the expanded programs.
All right.
That was actually probably true maybe 9 months ago. Remember, we had some looking at delinquency and HPA, and you got concerns about a rental income, where we kind of pulled back. It wasn't 1-to-1, right? Where we had for 3 months, and then we actually cut the LTVs and we slowly expanded that. But as you see on the middle of the page, DSCR under 1, LTVs is 75%, right? And why that's important for you, I'll just kind of with this, is that we typically use the 1007 or 1025 rent survey to calculate the DSCR. Doesn't mean your appraiser has all the right data. all right, or they go to the right resources, right? And so it could be lower than what it actually is, and you're going, hey man, it's still a good loan. The new owner of purchasing this investment property is going to do a little bit of work to it and get a little bit more towards market rents or above market rents from the sources that the appraiser did not have access to, right? So you turn it down? No, we make the loan work for them, right? And we understand that some of these are professional investors that have a game plan when they buy a property when the DSCR is under one, and we kind of recognize that. And so if you see that and you're struggling with a deal where you're out with a current lender because it's a little bit less than 1-to-1, maybe it's at 0.8, we can get that loan done for you. So let's go through these kind of like, just some of the bullet points here. Loan amounts to 2.5 million. Again, the minimum equity requirement reduced to 25,000. High-rise condos. Big one here, purchases, funds to close, right? Seasoning is only 10 days on funds to close. That's huge, right? And I got to tell you kind of why this is, right? It's like, does that make sense? Well, it does if you kind of understand and looked at a lot of these investment loans like we have done over the last 8 years, is that I was actually looking at a deal maybe 60 days ago and talking to one of our highly trained account executives. It's like, man, they're moving money back and forth because it's in an LLC. They're not related, but I have two couples that did the LLC to expand their investment portfolio. But one of them has in one account. The person that's doing the personal guarantee based on the percentage LLC doesn't have it. How can I close this within the guidelines of funds to close? Gift letter. It's not gift funds. It's not a relative. Right. So there's lots of reasons why this makes sense, and we're able to help out with that on the funds to close seasoning and make it really streamlined for you on our guidelines with that. Right. Cash out to $1 million. We talked about the DSCR under one. We talked a little about non-warrantable condos. 6-month seasoning to use appraised value. Right. That's on our investment properties or business purpose. Listed for sale. I've seen a lot of these where maybe it's listed for sale 4 months ago, right? And hey, I'm not going to sell it now. I'm going to hang on to it, and I'd like to get some limited cash out or whatever the reason is. We have options. Now, again, I kind of caution you is that, hey, it's listed for $500,000 4 months ago, and you get an appraisal in at $600,000. That may not make sense, right? So it's usually the value should be a little bit less than what the listed price is, right? Again, it's that common sense, right? If it's listed for sale, didn't sell for that, why is it worth more today? Again, you just need to explain that, kind of look at that, right? LTVs to 80%, that includes the short-term rental on a purchase, right? Foreign nationals, right? And when we talk about foreign nationals in Home Express, these are true foreign nationals, what we call them that. It's not those that are non-permanent resident aliens here on a work visa. Of course, they qualify, but these are foreign nationals that live and work outside the United States that would love the opportunity for their portfolio to have U.S. real estate, right? So typically they have no U.S. credit, right? There's a few that do, but typically they don't. We have options to get those closed for you. So keep that in mind when you see a borrower here. And this is what, non-QM is, especially Home Express. If it doesn't fit agency or it's kind of out of the box, what are you going to call him? And just call one of our highly trained account executives. They're going to be able to structure that loan for you to get that closed. Let's look at some examples of this. So this is a refinance of 10 non-owner properties for cash out. This is a borrower. It's got pretty extensive portfolio, 28 rental properties, and they want to expand that, saying, hey, there's probably some values out there where I can get some properties, right? And it was kind of challenging when you look at it because not all of them were institutional mortgages that they had on these properties of the 28. Some of them were private parties. Some were on the credit, some weren't, right? So we have options for multiple refinances with same borrower. So we're able to close these 10 loans, right, with streamlined conditions for the VOMs, right? So we look at the primary and the subject property and items on the credit report. There's no need to gather all the cancel checks. Now, we do check if there's any, major credit events, right? Some foreclosures on all the properties they own, just just typical like any other lender. But we're not going to ask for, hey, get me canceled checks on these 20 properties that were with private parties. That's very challenging to do, right? So as you look at that, don't get overwhelmed on that. Contact your Home Express account executive. We'll help you get that closed. Close in 30 days. That's with 10 properties you're doing with appraisals. You know, some of the comps are all under 70. Again, they did want to over leverage all their properties and looking at the cash out aspect of it and keep their rental income above what their full housing payment for each property was. So really good job by the broker that sent us to us and our account executive. There's another one. This is a purchase of a short-term rental in Florida, right? So short-term rentals, not everybody does those. They cap some of the LTVs or how they do it. But the challenge on this is that the AMC that they used to order the rent survey or the 1007 would not get the short-term rentals for us. So we had to go outside and say, hey, maybe the seller, because they say they want to buy it because it's a short-term rental with that. The seller actually, with their seller agents, hey, here's a 12 months documented short-term rental gross receipts. So we're able to take that average, because we need 12 months to get average, because we know in short-term rentals, some months are higher than others based on where it's at, right? Maybe, if it's a winter type of thing, sporting area, that they're higher in the winter months or skiing, or vice versa in some of the warmer beach property, beach area states, right? But the STR is above 1 using the seller's Airbnb receipts. LTV espresso was 75. Yes, got that deal closed where others may not have been able to get done. So compensating factors, 25% down, it's a good amount, and a marketable property, where it's high demand, selling very quickly in that market. So kind of to sum it up, we want your challenging loans, right? I mean, non-QM is about manual underwrites, right? So that's who we are. We're credit experts. We've got vast experience. Home Express has been around for 8 years. We're not new to non-QM. We're not, this is what we do, and what we founded our company on is by being good credit and giving good approvals out there that we can close your loan, right? I think our approval rate's probably closer to 95. We don't say no to a loan. It has to be reviewed by a supervisor, potentially loan committee. Even myself will be involved in that to try to make every loan work, right? We know every loan is valuable today, right? So you look around and you don't have stacks of short refinances, rate and terms on your desk. You might have some out of the box deals, and that's great. So the more you can close some of these ones that you think are out of the box, you're going to get more of those referrals from your real estate agents and from the borrowers that you close those loans, right? And you're going to have the opportunity in 2024, 2025 to do that rate and term transaction when the rates dip down, right? Again, I've talked a lot about a highly trained account executives are responsive, they're knowledgeable, and they know how to structure a loan and close your loan within the COE date. Also point out that we've added over the last few years agency or government opportunities. We felt like we could take our credit expertise and our service into the government world, right? So we do manual underwrites on FHA and VA. We have minimal overlay. So if it doesn't fit what you get done from your internal guidelines, give us a call. We can run the AUS through our XConnect portal. And we also have a scenario desk for agency for you too, to give you those answers, right? It's all about closing every deal that you have that you can get your hands on in today's market. We all know mortgage volume has been down. We want to help you close the deals that you have that you're getting in. So I'll take some questions, Andrea, and it can be anything. It can be on scenarios, guidelines, the industry itself.
Great, David. Thank you so much. We do have a question, and you're going to love this one. Will you do non-warrantable high-rise condo-tels?
Wow. Good question. We will do, I think we've closed a few condo-tels, even though it's not in our guidelines. These are recently. We are adding that into our guideline mix. And today I'm part of credit committee here. I've been here. I'm employee number 5 at Home Express, right? So we help build our guidelines over time. That's what we feel, specifically with the short-term rentals coming out. It's not like it was 10, 20 years ago where you had these, percentage of ownerships. You didn't know how well the condotel was going to be taken care of. Today, there are a lot of good condotels, are great marketable properties, well taken care of through the short-term rental kind of phenomenon that have happened with COVID, right? Where everybody kind of got into that. And I think they're great loans, and you look for that coming out in the next 30 days.
Excellent. Thanks, David. Let's see here. What would you recommend for an investor who wants to jump into fix and flip?
Wow, that's a tough market.
That's it.
I've actually seen some articles on the fix and flips in specific areas. It's not, it's tough today, but there's certain areas where you can get it, and there's going to be some strain in some areas on housing. There might be some job loss in certain areas where someone's going to have that. You can find a good deal. Maybe the property's not taken care of as well, where you can do some fix and flips, right? But as you're going into it, if you're brand new into it, please just go slow. I've been doing this a long time, right? And before the securitization markets come out for this non-QM, or I call manual underwriting of this, they're all like portfolios. So I've seen it where economies have gone great, everything's great, everybody's making money. Then when it goes slow, how are they prepared to handle that, right? So you go into these rentals, understand there's risk. There's risk that your rents are not paying you, right? There's all these type of risks. Do you have sufficient reserves, right? But go slow. Try one or two, the first year or two to get your feel for it, right? As you get into a fix and flip, right? Now, our fix and flip, we're looking at some type of programs for that, but again, we're more of a buy and hold, where you're looking for that rental income right now, and that's kind of what we're seeing in. Hopefully that answers your question.
That was great, David. Thank you. Here's another great one. You're going to like this one. Can you do non-QM purchase for someone that lives rent-free with mom?
Absolutely. I love those loans, man.
I know you do.
Tell you, we're looking at, when you look at a borrower, you're coming in and they don't have no housing, and you're looking at, why don't they have housing? Be curious, right? Well, I decided to live with my parents to save money for my down payment. Man, that's probably a pretty good decision, right? And so absolutely, we have programs for that. Totally understand that. Now, if you look at that borrower, they have no housing, live with mom, and they got some high BMW payment and a whole bunch of credit cards, and it's all gift funds, that might be challenging. But you look at its own merits, and people can make decisions, right? Financial decisions, and you look at it and go, is that a right financial decision? I want to reward great financial decision. That to me is one where I've seen that, and I support that borrower. We got programs for that where they could get a loan here. So no, living rent-free with relatives, to me, it's a great one, because that's reality of today, trying to save money for a down payment.
Great. Thank you, David. Here's another one. Do we have programs for ITIN?
Yeah, that's another one. Great. I've been working with our credit manager on that program to kind of relaunch it. We had it, and now we kind of took a pause on that for a year, especially with that HPA concerns, some delinquency concerns. But there is a legitimate need in our market for that program, right? It's been historically more of a portfolio program with some of the banks out there, community banks, that kind of stuff. But we have put together that one, so I'd look for that one shortly. And again, there's some concerns on ITINs, just from a credit perspective of, like, when you go up there, it's a common sense lending, delinquency potential. When you're looking at the credit, is a credit underneath the ITIN, or is underneath some type of social security number that's not valid to our borrower? So there's things you got to work out with that, and we'll get that out to you shortly. I'm hoping to launch that within the next 30 days as well.
Excellent. So more to come on that. So I believe that was the last question, David.
Questions, man. I like for the expansion with the condotels, the ITINs, and kind of seeing what we did. And again, the condotel, it's a nice property. Please let us look at that deal. We're not going to say no. It's because it's not in our guidelines doesn't mean we say no. We want to look at every loan. We're a true lender. We underwrite to our guidelines, fund with our own money. If we think that's a good loan, it's going to get done.
Excellent. Thank you. Well, we are right at 30 minutes right now, and let's go ahead and wrap it up. So once again, everybody, thank you so much for joining us today. If you are not already an approved broker, we would love for you to become one. It's so easy. You can go directly to our website and you can actually fill out the whole entire application directly online. You can also submit a loan scenario. So please visit us at our website for more information on that. And as always, David Grider loves to take calls. So please call him and email him if you have additional questions, or if you would like to get assigned an account executive, one of our highly trained account executives. So thank you, everybody. Thank you, David, for your time today. As I mentioned to the group, we'll be sending out a copy of this PowerPoint presentation as well as the recording. So thank you so much for your time, everybody. Have a great day, and we will see you next month. Thanks, everyone. Take care. Bye-bye.